Hello guys, so in this session I wanted to discuss with you all about some important points in residential status chapter which most probably are missing. There are 4 to 5 things I want to discuss with you about over here. Let's put down our agenda first. Number 1, I need to discuss with you about RNOR and deemed resident connection. Number 2, I want to discuss with you about territorial waters. What happens if an assessee is staying in territorial waters? Number 3, while residential status of individuals, students are very strong about it, they skip the rest of the chapter. So I want to discuss with you about residential status of HUF and residential status of company because it's been quite some time since they've tested this, and from here nice quality questions are possible. So these are the 4 things which I want to discuss with you in this session. Let's take them up one by one. Our very first discussion, this is about RNOR and deemed resident. See who exactly is a deemed resident. You must have learnt about this in your sessions as well. The deemed resident is a person who fulfills totally 4 conditions, guys. Condition number 1, he must be an Indian citizen. See, generally Indian citizen and person of Indian origin, in many places they go hand in hand. But here we are not talking about person of Indian origin, we are only talking about Indian citizen. Condition number 1. Condition number 2, you must be a non-resident. Condition number 3, total income minus income from foreign sources. That is, if I look at your income from Indian sources, this should be more than 15 lakhs. Alright. And condition number 4, the last condition is that this assessee is planning his stay in such a manner that he is not liable to pay tax in any country. He is not liable to pay tax in any country. For example, this person is, let us say, a non-resident in India and he is living in Dubai. He has other income in Dubai. Now Dubai, a tax haven, he doesn't have to pay tax over there. So he is a non-resident in India, he doesn't pay tax in India also, and he lives in Dubai, he is earning income in Dubai, but he doesn't have to pay tax in Dubai also because in Dubai no income tax only. So that is the meaning of the 4th condition, that assessee is not liable to pay tax in any country. He is not paying tax in any country. Either he is not liable to pay tax itself, or if he is liable to pay tax, he has some exemption because of which he is not paying tax. He has no tax obligation in any country. There are 4 conditions. If all these 4 conditions are fulfilled, then only that assessee becomes a deemed resident. So condition number 1, he must be an Indian citizen. Condition number 2, he must be a non-resident. Condition number 3, total income less income from foreign sources. That is, if you look at income from Indian sources, it should be more than 15 lakhs. And number 4, he is not liable to pay tax in any country. That is, in any country if you see, he is not having any tax obligation. Okay, so if all these 4 conditions are fulfilled, then that assessee becomes a deemed resident. Now see, in your computations, when do you even think about deemed resident? Like let us say you did the residential status determination and you concluded that your assessee is a non-resident. So when you conclude assessee is a non-resident, you don't end the answer over there. Next step, you check whether the assessee is a deemed resident or not. So to check whether the assessee is a deemed resident or not, these are the 4 conditions you apply. Did you listen to what I said? Whenever you conclude in residential status determination that assessee is a non-resident, you don't end your answer over there. You go a step further and you check now that is your assessee a deemed resident or not. You check these 4 conditions. Okay. Then you must have learned that if you happen to fulfill all these 4 conditions, you will become a deemed resident. Know that once you become a deemed resident, every deemed resident is considered as if he is an RNOR, resident but not ordinarily resident. So every deemed resident is RNOR, every deemed resident is deemed to be resident but not ordinarily resident. Okay, now at this stage, I need you to know a certain point. Your learning comes now. Till here, whatever I discussed, you were already aware of. You knew already that if your assessee happens to be a non-resident, I don't end my answer there. I go ahead and check, is my assessee a deemed resident or not? And for deemed resident, we check these 4 conditions. If all the 4 conditions are fulfilled, then your assessee becomes a deemed resident. And if your assessee is a deemed resident, your assessee will be considered to be RNOR. Now see, I just now told you that every deemed resident is deemed to be RNOR. But my question to you is every RNOR also a deemed resident. Every RNOR is not a deemed resident. See, the rule is very simple. Every deemed resident will automatically be considered as if he is RNOR. Every deemed resident is deemed to be resident but not ordinarily resident. But if you are an RNOR, it is not necessary that you are a deemed resident. You could be an RNOR because of other reasons. There are additional conditions, guys. Those additional conditions you did not fulfill. That is why you may be an RNOR. But just because you are an RNOR, it doesn't mean you are a deemed resident. So every deemed resident is an RNOR, but every RNOR is not a deemed resident. You may be an RNOR for any other reason. Maybe in 7 preceding previous years, you lived in India for less than 730 days. That may be the reason why you are an RNOR. In minimum 2 out of 10 preceding previous years, you are not a resident. At least 2 out of 10 preceding previous years if I see, even in 2 out of 10 preceding previous years, you are not a resident. Because of this reason also you may be an RNOR. You are understanding? So if any of the additional conditions is not fulfilled, even that could be a reason why you are an RNOR. So just because you are an RNOR, it is not necessary that you are also a deemed resident. But every deemed resident will automatically become RNOR. Got it? So this was my first point. Through this discussion, we also revised about deemed resident, 4 conditions, guys. Indian citizen, then non-resident, then total income, less income from foreign sources, more than 15 lakhs, and assessee is not liable to pay tax in any country. Alright, now coming to the second part of my discussion, what happens if an assessee is staying in territorial waters? Let's take a situation, let's say there's an assessee, let's call him Mr. John. Now this Mr. John, he lived in India like this. For 60 days, let us say he lived in Chennai. Then another 50 days, let us say he lived in Bangalore, and another 100 days in the year he was in a cruise ship. Now this cruise ship was going, let's say from Chennai to Goa, and he was on this cruise ship for 100 days. Alright. Now if you see this, when I say cruise ship, let me give you a little more information. Where the land mass of the country ends, from that point, for 12 nautical miles in the ocean, alright, we call this area in the ocean as the territorial waters. I'll repeat again, where the land mass of our country ends, this shaded region over here is, let us say, the land mass of our country. So where the land mass of our country ends, from the shoreline, 12 nautical miles in the water, 12 nautical miles in the ocean is considered as territorial waters. And let us say in these 100 days, my assessee was in the cruise ship, and this cruise ship was only sailing in the Bay of Bengal, the Indian Ocean and the Arabian Sea within these 12 nautical miles in these territorial waters. So 60 days in Chennai, is he in India? Yes. 50 days in Bangalore, is he in India? Yes. 100 days in the cruise ship. See, he is in the ship. He is not in the land. He is in the water. But is he in the territorial waters? Yes. So even this will be considered as stay in India. So my second point of discussion with you is that stay in India is not only stay in India on the land. It is not only staying in India on the land. It is also staying in India in the territorial waters. If you are staying in the territorial waters is how many nautical miles? 12 nautical miles from the landmass, 12 nautical miles from the shoreline. Even territorial waters will be included in stay in India. Understood? Yes. So this was my second point of discussion with you, that stay in India is not necessarily stay in the landmass. It can also be stay in the territorial waters. And remember the 12 nautical miles number. Alright. This was another small point I wanted to discuss with you. Now coming to the third point, let us talk about residential status of HUF. Many a times, students learn it as one small tiny concept and they close. There are some complexities involved over here, and that is what I am trying to target for you all. Look at this discussion now. What are we talking about? Residential status of HUF. Now, to find the residential status of a HUF, the first thing that you will check is where is the control and management of the HUF. See, control and management means what? Control and management does not mean where is the work happening, where is the business happening, where is the family residing, where is the registered office. No. Control and management, on the other hand, means that where are the major decisions of the family being taken. So, control and management means where are the major decisions being taken. There are three possibilities. Either this control and management may be fully in India, or this control and management may be fully outside India, or this control and management may be partly in India and partly outside India. The law says if even some control and management is in India, the HUF will become a resident. I'll repeat again. The whole discussion depends upon where is the HUF being controlled and managed from. Where is the control and management of the HUF? Where are the decisions being taken? If it is 100% in India, or if it is partly in India, partly outside India, that is, even to some extent, even to a small extent, if control and management is in India, then the HUF becomes a resident. But however, if the control and management happens to be outside India, then in that case, the HUF now becomes a non-resident. Here, the HUF becomes a non-resident. I'll repeat again one final time, listen to me. Where is the control and management of the HUF? If it is even to some extent in India, that is, either if it is fully in India, or if it is partly in India, partly outside India, even to some extent if it is in India, then the HUF will become a resident. But however, if it is fully outside India, 100% outside India, then the HUF will become a non-resident. Okay, now you tell me, to find the residential status of HUF till here, did I even talk to you about the Karta? Did I even discuss with you about the head of the family, the Karta? No. So, for this part of the discussion, the Karta is going to be irrelevant for me. Whether he is a resident, whether he is a non-resident, whether he stays in India, whether he stays outside India, I don't care. What I bother about is where are the decisions taken, where is the control and management of the HUF. Even to some extent, if the control and management is in India, HUF becomes a resident. But if 100% of the control and management is outside India, then the HUF becomes a non-resident. Now see, if the HUF happens to be a resident, we don't end our answer over here, right? We go ahead and we check that is this resident HUF an ROR or is it an RNOR, right? See, only for individuals and HUFs, we have this concept of ROR and RNOR, guys. That is only for individuals and HUFs. If the assessee is a resident, we go ahead and check is the individual resident, is the HUF resident an ROR or RNOR. All other assessees, if they are resident, we stop with resident. There is no concept of ROR or RNOR. But if the assessee is an individual or HUF, then yes, we go a step deeper. We check if the resident is ROR or RNOR. So even here I am talking about HUF. So yes, if HUF is a resident, I'll have to check whether this HUF is an ROR or RNOR. Now this is where the Karta will be relevant. This is where the head of the family, the Karta, we will bother about him, we will care about him. Listen, we will have to check whether the Karta is, here the Karta is going to be relevant. So we will have to check over here whether the Karta is fulfilling two additional conditions. Now what are the two additional conditions? Additional condition number 1. In 7 preceding previous years put together, the Karta should have stayed in India for at least 730 days. And additional condition 2 is that in at least 2 out of 10 preceding previous years, the assessee, the Karta should be a resident. So we are going to check the karta over here, that is the karta fulfilling these two additional conditions. Additional condition number 1, 7 preceding previous years, he should have stayed in India for at least 730 days, and in at least 2 out of 10 preceding previous years, he must be a resident. Okay, I have 2 additional conditions. If both the additional conditions are fulfilled by the karta, then the HUF will become ROR. Repeat. If the karta fulfills both the additional conditions, then the HUF will become ROR. Repeat again. If the karta fulfills both the additional conditions, then the HUF will become ROR. So do you agree, once the HUF is a resident, whether the HUF is ROR or RNOR, that fully depends upon the karta. Whether HUF is a resident or non-resident, that does not depend upon the karta. That depends upon where is the control and management. But once the HUF is a resident, now is it an ROR or RNOR, that depends upon the karta. If the karta fulfills both the additional conditions, then the HUF becomes an ROR. But however, listen to the second part. Let us say this karta, he fulfills additional condition 1, but he does not fulfill additional condition 2. Or let us say he fulfills additional condition 2, but does not fulfill additional condition 1. Or let us say additional condition 1 also, additional condition 2 also, neither of them he fulfills. Which means, in simple words, even one out of these 2 additional conditions karta is not fulfilling, then HUF will become RNOR. Understanding? So there are 2 additional conditions. If the karta fulfills them both, then the HUF will become ROR. So if karta fulfills both the additional conditions, then the HUF, the resident HUF becomes an ROR. But if karta does not fulfill even one of these additional conditions, then the HUF becomes RNOR. Thorough, guys. Till here the concept, did you understand? Yes. So residential status of HUF. Is the HUF a resident or not? That does not depend upon karta. That depends upon the control and management. If even a little bit of the control and management is in India, the HUF will become a resident. But if the control and management is 100% outside India, then the HUF becomes non-resident. If the HUF is a resident, we will go ahead and we will check, is it an ROR or is it an RNOR? Whether it is ROR or RNOR, that will fully depend upon the karta. If the karta fulfills both the additional conditions, then the HUF will become ROR. If the karta doesn't fulfill even one of the additional conditions, then the HUF will become RNOR. So this part depends upon the karta 100%. Alright everybody, if you've understood till here, let us take some concept test points. Let's see if you are able to answer my questions. Look at this, concept test number 1. Read it with me. HUF is a non-resident. HUF is a non-resident. So will you now check deemed resident condition? See, sometime back only I told you that if your assessee is a non-resident, next you will check, is it a deemed resident or not? So same thing I am asking you now. If the HUF is a non-resident, will you now check deemed resident condition? Will you check if the HUF is a deemed resident or not? The answer is a big fat no. Why? This whole concept of deemed resident is applicable only to individuals, guys. A HUF cannot be a deemed resident. The concept of deemed resident is applicable only to individuals. Point number 1. Concept test number 2. Concept tests are nothing but those points on which, they can twist the question, which generally students overlook. They are those points. Look at the second point now. Read it carefully. Very interesting point. HUF is a resident. Whether resident HUF is ROR or RNOR, it does not depend on HUF's control and management. Instead, it depends on the karta. True or false? Read again. HUF is a resident. Fact is given to you, HUF is a resident. Now whether this resident HUF is ROR or RNOR, that doesn't depend upon where is the control and management happening. Instead it depends upon who the karta is. True or false? Certainly true, guys. See, if the HUF is resident, now whether the resident HUF is ROR or RNOR, this fully depends upon the Karta, guys. If the Karta fulfills both the additional conditions, then the HUF becomes ROR. If the Karta does not fulfill even one of the additional conditions, then the HUF becomes RNOR. Right, guys? So if the HUF is a resident, then whether it is ROR or RNOR, that will not depend upon where it is controlled and managed from. Instead, it will depend upon the Karta. Okay, now look at the third concept test, everybody. This is a point on which generally students have a doubt. This will put to rest all your doubts. Read it very carefully. The question says, HUF is a resident. HUF is a resident. Karta is a non-resident, but he fulfills both the additional conditions. So HUF is ROR or RNOR. HUF is a non-resident. Sorry, HUF is a resident. Karta is a non-resident. See, resident or non-resident of individual. Karta is individual, no? So individual, whether he is resident or non-resident, it depends upon previous year. Previous year, did you stay in India for 182 days? Previous year, did you stay in India for 60 days? Previous year, did you stay in India for 120 days? And yes, we have preceding previous years, 4 years concept. He is a non-resident, but he fulfills both additional conditions. Additional conditions are only for preceding previous years. 7 preceding previous years, 10 preceding previous years, that he is fulfilling. So HUF is a resident, Karta is a non-resident, but he fulfills both the additional conditions. Is the HUF an ROR or RNOR? See, what is relevant for us? HUF is a resident. This is relevant for us. Only if HUF is a resident will I think about ROR and RNOR. Karta is a resident or non-resident. This is irrelevant, guys. Tell me, in this entire discussion, did we even check whether Karta is resident or non-resident? No. So whether Karta is a resident or non-resident, that is irrelevant. What is relevant instead? Does he fulfill both the additional conditions? Yes, he fulfills both the additional conditions. So what is relevant for me? HUF is a resident and the Karta is fulfilling both the additional conditions. So now is the HUF an ROR or RNOR? The HUF is an ROR. All my conditions are fulfilled. See, coming back to the flow chart, when will the HUF be ROR? First of all, the HUF should be a resident and the Karta should be fulfilling both the additional conditions. That is fulfilled over here. Whether the Karta is a resident or a non-resident, that is irrelevant. We are not even talking about that. That doesn't even matter to us. What matters is Karta is fulfilling both additional conditions, so HUF will become ROR. Alright. Now look at the last concept test over here. HUF, the control and management is like this. 95% of the control and management is in the US. Only 5% is in India. Now will the HUF be a resident or a non-resident? See, when we said partly in India, partly outside India, did we say 50-50? No. So even to some extent if the control and management is in India, even little bit if the control and management is in India, that is enough, guys. So at least some control and management is in India, therefore the HUF will be a resident. Understanding? Yes, so with this we've learned our entire discussion on residential status of HUF. We saw the flowchart. We said that whether the HUF is a resident or not, that does not depend upon Karta. But once a HUF is a resident, is it an ROR or RNOR? That will depend upon Karta. And we saw these 4 concept tests as well. So even this we have completed. Now coming to the last target of this session, we need to discuss next about the residential status of companies, guys. Simple discussion, but there are some points, some crucial points over here as well which I want to discuss with you, and that is why I am taking this concept up. Residential status of a company. See, I'll discuss this with you in 2 points of view. Alright. First point of view, we'll have to check whether the company is an Indian company or is the company a foreign company. See, if the company is an Indian company, I don't even have to check anything else. If the company is an Indian company, I can straight away conclude that the company is a resident. I don't have to check anything else. But however, if the company happens to be a foreign company, now I'll have to do some checking. I'll have to check where is the place of effective management of the company. Where is the POEM, the place of effective management? Is it in India or is the place of effective management outside India? Now, if the place of effective management happens to be in India, by default, this foreign company will become a resident. But however, if the foreign company's place of effective management is outside India, if the place of effective management is outside India, then it becomes a non-resident. So a question arises now that what exactly do you mean by place of effective management? See, place of effective management is nothing but the place where key managerial and commercial decisions are taken. Place of effective management is a place where key managerial and commercial decisions are taken. This is key terminology, you cannot change this. Key managerial and commercial decisions are taken. Now, how to find where is a place of effective management? There are a set of POEM rules which have been released, but you will be learning them only in your CF final. So, how to determine place of effective management? For that we have POEM rules. That we are not bothered about. So, in the examination we will first check, is the company an Indian company or is it a foreign company? If it's an Indian company, I don't have to check anything else. I can straight away conclude that it is a resident. But however, if it is a foreign company, then I'll have to go a step deeper. I'll have to check where is the place of effective management of the company. If the place of effective management happens to be in India, then the foreign company will become a resident. If the place of effective management is outside India, then the foreign company will be a non-resident. Place of effective management means a place where key managerial and commercial decisions are taken. Alright, now shall we check how well we understood this? There are only 4 situations possible. I'll put down the 4 situations for you. You tell me in each of these situations whether the company is a resident or a non-resident. Okay. In the first situation, the company is an Indian company. Okay. But however, the place of effective management is outside India. Now, what is the residential status of this company? This company will definitely be a resident. Why? What's the decision making factor over here? It is an Indian company. If it's an Indian company, I don't have to check anything else. I will straight away conclude it is a resident. Now, if it is a resident, will I dig any deeper and check for ROR, RNOR and all? No. ROR, RNOR, that is only for individuals and HUFs. Okay. Coming to the second situation now. I have an Indian company, but this time its place of effective management happens to be in India. Now, what is the residential status of the company? Again, the company is a resident. What is your decision making criteria? It is an Indian company. If it's an Indian company, it by default becomes a resident. Where is the place of effective management? That is irrelevant for me. Situation number 3. This time my company is a foreign company. If it's a foreign company and I'll check where the place of effective management is. Place of effective management happens to be outside India. Now, what is the residential status of the company, guys? This company is going to be a non-resident. Why? Because number 1, it is not an Indian company. And number 2, if it's a foreign company, its POEM is not in India. Its place of effective management is not in India. It's outside India. So neither is it an Indian company, nor is the place of effective management outside India. Therefore, it is a non-resident. See, here your decision making criteria is its POEM is outside India. So because it's a foreign company, my next point of check is place of effective management, which is outside India, therefore non-resident. Coming to the fourth situation, again, yes, the company is a foreign company and the place of effective management happens to be in India. Now the residential status of the company, yes, of course, it will be a resident. Why? What's the decision making criteria? It's a foreign company. So I don't care about the company, I will check the place of effective management. Is the place of effective management in India? Yes, it becomes a resident. You understood now. So there are 2 points of view. First point of view is this one. If it's an Indian company, it's by default a resident. If it's a foreign company, if place of effective management is in India, then only it will be a resident. Now see, The same thing you can learn from another point of view. Whether you go left to right or whether you go right to left, you have to reach the same destination. So there is another point of view, another way in which you can discuss this whole concept. See, a company will either be a resident or a company will be a non-resident, guys. So when will the company be a resident? A company will be a resident either if it is an Indian company or if its place of effective management is in India. I have two conditions. I put the word or in between, which indicates if any of the two conditions is fulfilled, then your company becomes a resident. See, if it's an Indian company, I won't care about anything else. I'll say it is a resident. If it's a foreign company, but place of effective management is in India, then again I will say it is a resident. So out of these two, if even one criteria is fulfilled, company is a resident. However, if the company happens to be a foreign company and if the place of effective management happens to be outside India, I have two conditions. This time I put the word and in between, which indicates I want both the conditions to be fulfilled. Then only the company will become a non-resident. Are you agreeing with the second point of view? See, Indian company, very interesting this is. I hope you're understanding. Indian company or poem in India, anyone fulfill it will become a resident. If it's a foreign company and poem is outside India, then only it will be a non-resident, guys. If you see all these combinations, you have non-resident only if it is foreign company and the place of effective management is outside India. Right? So this is another way of looking at the residential status of company. So these are the 4 things that I wanted to discuss with you in the residential status chapter. Alright, 4 things which I thought some of you might have missed on. Alright, I am hoping that you got at least little benefited from this session. If this session was of any use for you, let me know in the comment section below. And like this, if there are any other concepts that you need any sort of help on, please let me know about that as well. Thank you guys. Bye-bye.